Production will be arranged so the closing inventory at the end of any month is sufficient to meet the sales requirements in the following month. Okay, value of $30,000 is placed on the inventory of finished goods which were acquired on purchase of the business, and this valuation is based on the forecast of production cost per unit. Okay. The single raw material will be purchased so that inventory at the end of the month is sufficient to meet half of the following month's production requirement. Okay. So the raw material inventory acquired on purchase of business is 15,000. So it means that the opening stock they give 15,000 is valued at the cost per unit. Okay. Yeah. So whatever calculations which we made, I hope these are clear up to here. Or just I want you want me to give a quick overview on our calculation. Yes. Okay. Right. So now we need to calculate the closing value, closing inventory, and the opening inventory. Sorry. This week class is from 10 to 11:30. Okay. Your classes will be from 10 to 11:30. And I think already this is communicated. On Saturday itself, this timings was communicated. I think this was not coordinated with you. Okay. Naina, you want me to give a quick overview? Okay. So just give me 5 minutes. In 5 minutes, I will give you a quick overview. So here they gave information. So here you can see that the company is planning for a manufacturing business with $3,15,000, and it means they purchased the business with $3,15,000, and this 3,15,000 includes a goodwill of 1,50,000 and equipment and fitting of 1,20,000, and it also includes an inventory of raw material of 45,000. So a delivery van will be purchased at $15,000 as soon as the business purchase is completed, and the delivery van will be paid for the next second month of the operation. So there is no cash outflow in the first month because the amount of 15,000 will be paid in the second month. Then they gave the forecasted figures. Here you can see sales before the discount of the business single product at a markup of 50% on the production cost. So it means that the sales is 60% on the production cost, nothing but here you can see the profit is 60%. So let us assume that if the production cost is 40, then profit will be 60. So total comes to 100. So sales of the business single product at a markup of 60% on the production cost. So the profit is 60% on the production cost. Okay. And they gave the forecasted figures. So from 1, 2, 3, 4, 5, 6, 6 months forecasted figures they gave. And here we can see the 96 first 2 months it is 96 and 92, 96, 100 and 1. And they gave some additional information that is 25% of sales will be for cash and the remainder will be on credit basis. So 25% of the sales will be cash and the remaining 75% is on credit sale, and a discount of 10% will be given to selected credit customers. And the company is also providing a 10% discount, and these selected customers are 25% of gross sales. So it means for approximately 25% of the customers, the company is paying a discount of 10%. And they also give additional information. The production cost will be 5 per unit, and it is bifurcated as raw material 2.5, direct labor 1.5, and even fixed overhead 1. So the total production cost sum is 5 per unit. And next information is production will be arranged so that closing inventory at the end of any month is sufficient to meet sales requirements in the following month. So production will be arranged. It means that the closing inventory at the end of the any month is sufficient to meet the sales requirements in the following month. So whatever closing inventory is there, that is sufficient to meet the sales requirement in the following month. Suppose example, if the closing inventory is 10,000 units, so the next month sales, this 10,000 units is sufficient to meet the sales requirements of the following month. And they also gave a value of $30,000 is placed on the inventory of finished goods, which was acquired on purchase of the business. So it means the total value of inventory, the value of $30,000 placed on the inventory of the finished goods, which was acquired on the purchase of the business. And this valuation is based on the forecast of production cost per unit. So this is done, how we got the 30,000? This 30,000 is done on the basis of the production cost per unit, that is 5 per unit. Okay. Then single raw material will be purchased so that inventory at the end of the month is sufficient to meet half of the following month production requirement. So the raw material inventory acquired on the purchase of the business is $15,000 is valued at the cost per unit, that is forecast. Okay, so cost per unit is already given there, and the raw material will be purchased on 1 month's credit. Then the cost of direct labor will be met as they are incurred in the production. Then the fixed production overhead rate of $1 per unit is based upon a forecast of first year production of 1,50,000, and this rate includes a depreciation of equipment. So do remember a fixed overhead rate of $1 per unit. Now it is calculated on the basis upon the forecast of first year production. So the first year production estimated as 1,50,000 units. And this $1 includes the depreciation of equipment and fittings on a straight line basis over the next 5 years. And fixed production overheads is paid in the month incurred. So selling and distribution overheads are all fixed and will be $2,08,000 in the first year. So the overhead include depreciation of delivery van at 30% per annum on reducing balance basis, and all fixed overheads will be incurred on a regular basis and paid in the month incurred. So with the exception of rent, rates and taxes. And $25,000 is payable for the year ahead in the month for rent and rates. So this is the information. So first requirement is you need to prepare a monthly cash flow forecast, and you should include the business purchase monthly. You should include the business purchase and the first 4 months of the operation, and we should calculate the values of receivables, inventory, and payable balance. So this is the requirement. So first here we started with the cash budget. So opening balance cash sales we got it as 24,000. So how we got 24,000 as cash sales? The total sales is 96,000. On that 25% is the cash sales. So then 24,000 is the cash sales, and collection from debtor, because we gave the 1 month credit period to the customer. So there will not be any collection from the debtor, and even discount is also not applicable, and there is no opening balance of cash for the first month. So in order to get the payment, now generally the first payment would be purchases. Now here there is no clear information regarding the purchase. So for calculating the purchases, we started with a working note. So the first, in order to get the working note, first to sales. So the total sales is 96,000 as per the question, and units. So in order to get the sales, we need to get the selling price per unit. So here they clearly mentioned that the sales are 60% of the production cost. So selling price per unit will be production cost is how much? $5. Here you can see production cost is 5, and on that 60% profit. So whatever total value we'll get, that will be considered as selling price per unit. So our selling price per unit is 8. Then the sales is 96,000, and sales units. So how we will be getting the sales unit? 96,000 divided by 8. That is total sales divided by selling price per unit 8. So we got a sales unit of 12,000. Then the closing inventory. Now here they mentioned that production will be arranged so that closing inventory at the end of any month is sufficient to meet sales requirements in the following month. So in the following month, they gave sales requirements as here you can see the total sales. I think there is no change in the sales 96,000. So it means that next month we are selling how many units? Same 12,000 units. So the units which we are selling in the next month will be the closing inventory for the current month. So that's why we took same 12,000 as our closing inventory, right? Then opening inventory. Now generally opening inventory information is given. So here you can see the value of $30,000 is placed on the inventory of finished goods, which was acquired on the purchase of the goods. So, and this is valued on the basis of production cost per unit. So the production cost per unit is 5 per unit, and the opening inventory value they gave it as 30,000. So 30,000 divided by 5, we got 6,000 as opening inventory. And what is the total production during the year? Because in order to get the purchases, we need to calculate the value of production. So how many units are produced? So here 12,000 units are sold and 12,000 units are closing stock. So it means total 24,000 units. In this 24,000 units, what is the opening stock? 6,000 units. So 12 plus 12, 24 minus 6. Sorry, it is 18,000. Sorry, not that. So 12 plus 12, 24 minus 6. So it will be 18,000. So the total production is 18,000. And what is the cost of this raw material consumed? So 18,000 into the raw material cost per unit is 2. So it comes to 45,000. So I think we calculated up to the discussed that. So before I proceed with the closing inventory, let me know if you have any questions. Yes. I request the participants to please respond. Shall I explain the closing inventory now? Yes. Now, they gave some information regarding the closing inventory. So please focus on the second paragraph. The single raw material will be purchased so that the inventory at the end of the month is sufficient to meet half of the following month production requirement. So whatever closing inventory is there, the closing inventory of the current month is sufficient to meet half of the production requirement of the following month. So in order to get the closing inventory of the first month, we need to calculate the production requirement of the second month. Okay, now let me first calculate the second month requirement. So there is no change in the sales. So same figure 96,000. And units also there is no change 12,000. Right. Now here I want someone to please help me out. What will be the closing inventory for the second month here? Number of units. What will be the closing entry number of units for the second month? I think you can easily guess it. 12,000 only. Now, if you see the information, you see this one. 11,500. Okay. So, how we got 11,500? Anyone? Okay. Right. Yes. So, here it will be Very good, very good, correct. So the closing inventory will be 92,000 divided by selling price per unit. So it is 11,500. I hope it is clear for all. Yes. If anyone find any difficulty, let me know, please. Because the total sales is because we will be considering the next month sales. So third month sales is 92,000. So 92,000 divided by 8. Then we got 11,500. Okay. Fine. So I think I can proceed. So this will be the closing inventory. Now what will be the opening inventory? What will be the opening inventory? Last month closing will be the opening for the current month, right? So whatever the closing inventory is there for the last month, here just see this. So the first month closing inventory is 12,000. Now that will be the opening inventory for the second month. Is that clear? Now the total production units will be, so sales are 12,000, then closing stock 11,500, then opening stock, how much? 12,000. So I hope it is clear for all. Is it clear? Then what is the raw material consumed? So how we will be getting the raw material consumed here? 11,500 into cost of raw material 2.5. So the total raw material consumed will be 28,070. So before I proceed for the next step, let me know. Is it clear for all? So the total production, how will be getting production? Number of units sold plus closing stock minus opening stock. So for the second month, number of units sold is 12,000 and the closing stock is 11,500 and opening stock is 12,000. So the total production units during the month is 11,500. And what is the cost of raw material per unit? 2.50. So 11,500 sorry 11,500 into 2.5, we got a raw material consumed is 28,750. So in the adjustment they mentioned that the single raw material will be purchased so that the inventory at the end of the month is sufficient to meet half of the following month production requirement. Now what is the production requirement of the second month? 28,750. Then what will be the closing inventory for the first month? 50% of that. So it means 28,750 divided by 2. Why 2? Because it is 50%. Or if you're confusing, let me put like this into 50%. So the closing inventory value is 14,375 for the current year. And less opening inventory. Already they gave it in the question. So opening inventory, how much they give? 15,000. So finally, the total raw material, nothing but the total purchases for the month is raw material consume 45,000. Okay. Then closing inventory. Yeah, we are having two closing inventories. Na? So this is number of units, or let me put like this. I hope most of the students are happy. I hope now it is clear. So the purchases would be 45,000 plus 14,375 minus opening. So the total purchases is 44,375. Okay. So any query on this? Yeah. So have we got closing inventory 14,075 here? Now just try to understand this paragraph. The single raw material will be purchased so that inventory at the end of the month is sufficient to meet half of the following month's requirement, half of the following month's production requirement. So the following month for the first month is second month. So the total production requirement, so it means here you can see the total production requirement is 28,750 for the second month. In that 50% will be our current month closing stock. So 28,750 into 50%. So we got 14,375. Is that clear? Don't, no problem. Take your own time, but please make sure that you understood. So there is no hurry here. Take your own time. Try to go through the step by step. Still, if you have any query, please feel free to come. Nothing but ask me if you have any query. So any query up to purchases? Opening inventory in question they gave, no? Just I highlighted here. Just see this $15,000 in question itself they gave. Sorry. Yeah. Any other query? See here why they are having. Okay. First, let me explain the first one. Why they are having two opening inventory but different amounts. See, not let me explain this. This opening inventory which we are seeing is in units. It is in units. Now the opening inventory 15,000 is in amount. Is that clear? Yeah. Then one more question is purchase amount. Now let me explain the purchases. Now how we will get the purchases? First one is total raw material consumed. So what is the amount of raw material we consume? That is 45,000. And what is our closing inventory? 14,375. So 45,000 plus closing inventory 14,375 minus the opening stock of inventory, that is 15,000. So 45 plus 14,375 minus opening inventory 15,000, then we'll get 44,375 as purchase. Okay. I hope the purchase is also clear. Now the next one, they gave one more adjustment. Second year closing stock, this one, right? Yeah. Now here just see this one. Production will be arranged so that the closing inventory at the end of any month is sufficient to meet sales requirements in the following month. So it means it is sufficient to meet the sales requirements of the following month. So it means that we consider the next year sales, that is third month sales. So what is the third month sales here? 92. So the total value of third month sales is 92, that is 92,000. Here you can see 92,000. And number of units. So selling price per unit already we calculated, that is 8. So it means 92,000 divided by 8. So we got 11,500 as the number of units which we sold in the third month. We are going to sell 11,500 units in the third month. So this should be considered as the second month closing inventory because they mentioned here. The production will be arranged so the closing inventory at the end of the any month is sufficient to meet sales requirements of the following month. So for the second month, what will be the following month? Third month. So what is the sales requirement for the third month? 11,500. So that will be our closing stock for the second month. I hope it is clear now. Yes. Okay. Now shall I go with the next adjustment? So here they mentioned that the cost of direct labor incurred in the production will be met as they are incurred in the production. The cost of direct labor will be met as they are incurred in the production. So it means that what will be the cost of whatever labor cost or cost of labor? They are incurred in production. As per the production, the cost of labor will be there. So what is our production number of units produced during the year? 18,000. So 18,000 into what is the labor cost? How much the direct labor cost? 1.5 into 1.5. So the labor cost is 27. Okay. Now can anyone calculate the second month closing inventory? What will be the second month closing inventory? Will you try? Or you want me to do? Your wish. If you want to try, you can, or if you want me to solve, I will do. Okay, 12,000. So Naina already did. So the closing inventory is 12,000. Can you help me? Have you got 12,000? Sorry, not what I am asking is the closing inventory value 12,000. I need closing inventory value. Closing inventory in units. This I am showing the formula, Ravi. This one, see that. Naina, you gave two answers. So Okay, 15,000. Normal unit. What is that? I didn't get the normal unit in the unit calculation. Okay. Same 96,000 divided by 8. Okay. So in order to calculate, so I appreciate some students already gave the answer, but I don't know. I just calculate now. I need to calculate. Then only I will be knowing whether it is right or wrong. I think most of the students say that 15,000, right? Okay. So what will be the closing inventory here? Because in order to calculate the closing inventory value for the second month, we need the raw material consumed for the third month. Then only we can calculate that. So what will be the closing inventory here? 12,000. Very good. So I hope it is clear. Because for calculating the third month closing inventory, we consider the fourth month. So 96 divided by 8. Then opening inventory. What will be the opening inventory? This is very simple. Last year closing will be the current year opening. So it will be 11,500. So the total production will be 11,500 plus 12,000 minus 11,500. So the total production units will be 12,000, right? And the raw material consumed will be 12,000 into raw material cost per unit 2.5. So it comes to 30,000. So the third month the production cost is 30,000. Then the closing inventory is 50% of that. So 30,000 into 50%. So it is 15,000, right? And what will be the opening inventory for second month? What is the value of opening inventory? Very good. 14,075. Perfect. Because the last month closing value is nothing but opening value for the current month. So 14,375. Now the purchases would be 28,750 plus 15,000 minus 14,370. So the purchases would be 29,375. Okay. The labor cost. So the total units are 11,500 into 1.5. So the labor cost would be 17,250. Now can anyone help me please third month? Third month closing inventory. Closing inventory will be how much? 12,500. Very good. Then opening inventory 12,000. Production 12,500. So raw material consumed 31,000. Okay, Ankit. When I will explain the labor cost for the third month, I will be explaining. Okay. So what will be the closing inventory now? 15,625. So that is 31,250 into. Then opening inventory 15,000. So then the purchase will be 30,000. Now just see the labor cost on it. So the total units. So what is the total number of units? 12,000, right? Production units. Just see the production unit. Total production units is 12,000. And what is the labor cost per unit? As per the question, 1.5. So 12,000 into 1.5. So this 18,000 will be our labor. I hope now you understood that. Is that clear, Anil? Yeah. Then again closing inventory for fourth month. So total sales for the fifth month is 1 lakh. So unit 12,500. So closing unit will also be same. $13,000. Opening. So the total production unit 13,000. So raw material consumed comes to 32,500, and closing inventory would be 16,250. Then opening inventory, how much? 15,050. So 31,875 is your purchases, and the labor cost would be so. I hope the calculation is clear. Any query? So up to 4 months only they ask. So up to 4 months. So any question on this? Is that clear? You want me to explain once again all these values,
So like how we get them?
So here, the first thing is when it comes to the first month sales, it is given in the question that the first month sales is 96,000. Now, how we got the sales unit? See, the total sales is 96,000 and the selling price per unit is 8. How we got selling price per unit? Because it is not given in the question. But they mentioned that your selling price per unit is 60% profit on the cost per unit. So if your cost per unit is 100, then your selling price is 60% on that, so it comes to 150. So here they gave the cost per unit as 5 per unit. So 5, here you can see the formula, 5 plus 60%, because we are adding 60% profit on the 5. So the total selling price per unit is $8. So 96,000 divided by selling price per unit 8, we got number of units sold. Then closing inventory. So in the question they mentioned that the closing inventory of the current month is equal to the sales units of the next month. So it is given in here. The closing inventory of the current month is equal to the sales inventory of the next month. So that's why I again opened second month sales. So second month sales is also same 9,60,000 and there is no change in the number of units. So it is 12,000. So the second month sales unit is 12,000. That I will assume as closing inventory for the first month. Because in question they ask us to assume the next month sales unit as closing inventory of the current. Then when it comes to the opening inventory, so in opening inventory already in the question they mentioned that the value of the inventory was 60,000 and the selling price per unit, it means it is calculated on the production cost base. So 30,000 divided by 5, I got opening inventory as 6,000. Then when it comes to the production, so how we will getting the total production units? That is unit total sale sold unit, that is 12,000 plus closing stock units 12,000. So it comes to 24,000. From that, if I deduct the opening stock of 6,000, so 18,000 is nothing but the total number of units which were produced during the month. So total 18,000 units were produced during the month. Then when it comes to the raw material consumed, so what is the value of that 18,000? So in that case, first we consider the raw material value, that is 2.5. So 18,000 into 2.5. So the total raw material consumed is 45,000. Now when it comes to the closing inventory, now here you might be getting a doubt. Already we done a closing inventory, but the closing inventory of 12,000 is in units, but we need the closing inventory in amount. So in order to calculate the closing stock in amount, so in the second adjustment they gave that the raw material will be purchased so that the inventory at the end of the month is sufficient to meet the half of the following month requirement. It means in order to get the closing inventory of the current month, we need to calculate the production, that is nothing but raw material consumed for the next month. So that's why I calculated the raw material consumed for the next month by using the same technique which I used for the first month. So the raw material consumed for the second month is 28,750. In that they mentioned that of nothing but 50%. So 28,750 into 50%, I got 14,375 as closing inventory. And already opening inventory value is given in the question itself, 15,000. So 15,000. Then the purchases. So how I got the purchases here? Raw material consumed 45,000 plus closing inventory 14,375 minus opening inventory of 15,000. I got a purchases of 44,375. The similar process we will be applying for the next following thing. And when it comes to the labor cost, so they mentioned that the cost of labor will be met as they are incurred in production. So what is the total production here? 18,000. And the cost of labor is $1.5. So 18,000 into 1.5, I got 27,000 as my labor cost. I hope you understood, Guru.
Yes.
Yeah. But definitely here practice required. So students should go for the kind of practice. How do we calculate closing inventory? Fifth year, sixth year. Good question. Now, sixth year means they would have given the seventh year, seventh month values. Okay. They would have given the seventh month values. So I hope it is clear up to now. Now, once we'll complete all the adjustments, then we'll go with the main problem. Then next adjustment is fixed production overhead. Fixed production overhead rate of $1 per unit is based upon a forecast of the first year's production of 1,50,000. Now, this rate includes depreciation of equipment and fitting on a straight line basis over the next 5 years, because when we were purchasing the business, it includes a machine value also, and the life of machine is 5 years, and the fixed production overhead is paid in the month incurred. So now we need to calculate the fixed production overheads. Just give me 1 second. So $1 per unit based on upon forecast of first year production of 1,50,000. Then in that case, then total fixed overhead. Any idea about overheads? What do you mean by overheads? Has anyone heard about this? Yes. Yeah. Now the overheads are nothing but indirect expense. The expenses which we cannot directly apportion or we cannot directly distribute to a specific expense, that is known as overheads. Generally, we are saying it as indirect expenses. Indirect expenses are nothing but over. Suppose example, every company will be having different departments: production department, manufacturing, purchase department or sales department. Now there are certain common expenses. Now let me take a small example. A big factory is there. In that factory itself, marketing department is there, and the production department is there, accounts department is there, and HR department is also there. Now let us assume that company paid salary to the watchman. Now watchmen look after the complete factory premises. Now it is very difficult to allocate the salary of the watchman to a specific department. We cannot allocate the watchman salary either completely to a production department or a marketing department or an accounts department or an HR department. Now in that case, what we'll do, we will divide this among all the departments. So the expenses which we cannot directly relate to a specific department are known as indirect expenses. So these indirect expenses are known as overheads. I hope you understood. Is it clear? So the total fixed overheads, the adjustment is 1,50,000 units and $1 per ton. So it comes to 1,50,000. I hope it is clear. The total fixed overheads are 1,50,000. Now they also mentioned that this includes a depreciation of equipment and fitting on a straight line basis over the next 5 years. So depreciation on equipment. Sorry, I didn't get you. Sorry, I didn't get your query. Why? Yeah, the total yearly they gave it. Na? So the complete total units of the year will be 1,50,000. First year production. Okay. So the depreciation. So here you can see depreciation is done on straight line basis for 5 years. So the total cost of plant and equipment, how much is it? Sorry. Can you see my screen? Yeah. So here the cost of machine is 1,20,000. So what will be the depreciation? 1,20,000 divided by 5, because the life of the asset is 5. Okay. So we got 24,000. So if you deduct the depreciation, that is 1,50,000 minus 24,000. Then we got amount of 1,26,000. Right? So this is completely 12 months total unit. So in order to get for 1 month, so what will be the cash outflow for 1 month? Because here why I am deducting the depreciation is a non-cash item. Company won't be incurring any cash on the depreciation. So the total fixed overheads includes the depreciation part also. So the total fixed overheads for complete 1 year is 1,50,000. So it is how I got 1,50,000 is the number of units into $1 per unit. So it comes to 1,50,000. And from that I will be deducting the annual depreciation. So the depreciation is the cost of asset is 1,20,000 and the life of asset is 5. So I got 24,000 as depreciation. So if I deduct the non-cash depreciation, that is the non-cash expense from 1,50,000, I got an amount of 1,63,000. Now I need to calculate the annual cash outflow towards the fixed overheads. So 12 months it is 1,26,000. So for 1 month means divided by 12. So the cash outflow for 1 month will be 10,000. Is that clear? Yes. Is that clear about production overhead? Just giving a quick overview on this. Actually, for production overheads in the question they gave that total it is 1 lakh $1 per unit. So fixed production overhead is $1 per unit. So the total annual units expected is 1,50,000. On that $1 means we'll be getting 1,50,000 is nothing but the total fixed overhead. Now in this total fixed overheads, if any non-cash elements are there, that we need to exclude. So here they mentioned depreciation because this 1,50,000 includes the depreciation part. So on what we will be calculating the depreciation? Equipment. So the value of plant and equipment is 1,20,000 and its life is 5 years. So 1,20,000 divided by 5, I got a depreciation on equipment as 24,000. This 24,000 is a non-cash because there will not be any cash incurrence on depreciation. So 1,50,000 minus 24. So the amount of total fixed overheads will be 1,26,000. Now this 1,26,000 is for complete year, but we need only for 1 month. So 1,26,000 divided by 12, we got an annual cash flow of 10,500. Is that clear now? Yes. Then the last adjustment is selling and administrative overheads. Now first we'll read this. Selling and administrative overheads are all fixed, and it will be 2,08,000 in the first year. Now these overheads include depreciation of delivery van at 30% per annum on a reducing balance basis. All fixed overheads will be incurred on a regular basis and paid in the month incurred, with the exception of rent and rates. So excluding rent and rates, all the other fixed overheads are paid in advance in the same month. Uh, why did you only take the fixed overheads only for 1 year? Now we are preparing cash budget only for 4 months. Na? So it means the company is expecting the fixed overhead. See, I think here you are confusing. We are preparing the cash budget for months, not for years. Travis, these are months. 1 month, 2 months, 3 months, 4 months, and 5 months. And they gave complete year value. I think here you got confused. We are preparing cash budget for months only. On month basis, we are doing this. We are preparing cash budget only for 4 months. Okay. Yeah. I hope your doubt clarified. Yeah. So here they mentioned that 30% of depreciation towards a delivery van, and all fixed overheads will be incurred on a regular basis and paid in the month incurred only, and with the exception of rent and taxes, sorry, rent and rates, excluding rent and rates, and $25,000 is payable for the year ahead in month one for the rent and rates. So it means that rent and rates are generally paid 1 month ahead. So it paid in advance. Now we try to calculate this. What will be the effect? Sorry. So total selling overhead. Two lakh 8,000, and I think most of you knows that we need to deduct the depreciation. So these overheads includes a depreciation of the delivery van at 30% on reducing balance basis. So what is the cost of delivery van? So the delivery van will be purchased for 15,000 as soon as the business purchase is completed. So the delivery van will be paid in the second month of the operation. So it means that the cost of the delivery van is 15,000. So the depreciation would be into 30%. I hope it is clear. So after deducting the depreciation, then the net amount will be 2,08,000. So the net amount is 2,03,500. Okay. So I hope it is clear. And they mentioned that the rates and taxes, that is 25,000. Yeah, $25,000 is payable for the year ahead in the month for rent and tax. So it means the first month we will be paying, 1 month ahead it will be paid. So generally first month it will be done, and the remaining month we should calculate. So first we got 2,03,500. From that we will be deducting the rent. So what is the rent? They gave 25,000. So after first month, the net amount is 1,38,500. I hope it is clear. So monthly payment. So every month there will be a cash outflow of 14,870. So any question on this? Any query on selling and distribution overheads? Yeah, let me explain. Actually, after deducting the depreciation, our total net cash outflow towards the selling and distribution is 2,03,500. But here they mentioned that this rent and taxes, that is 25,000, is payable for the year ahead in the month for the rent and taxes. So nothing but we should assume it as an advance amount. So 2,03,500, if you pay 25,000 as advance, then we left with a 1,78,500. So this 1,78,500 divided by 12, we got a monthly payment of 14,875. So the monthly cash outflow obligations would be 14,785. Okay. So shall we go with the cash budget now? Yes. Yeah. So in the cash budget, opening balance, there is no opening balance for the first month. So cash sales are 24,000, and there is no collection from debtors also. So it means the total receipt is 24,000. Then payment. So payment, purchases. Now can anyone let me know what will be the purchases for the first month? Yes. What will be the purchases for the first month? Expected that you will be saying 44,000, 44,375. But see this here, this one. Purchases, raw material purchased on 1 month credit. It means we won't be paying the amount immediately. We got 1 month credit. So that's why there will not be any cash outflow towards the purchase. I hope you understood this. Actually, the first year purchase is yes 44,375. But when we will be paying 1 month credit means next month we will be paying the amount. Okay. Is that clear? Then what is the other payment? Production overheads. So already we got production overhead from us 10,000 pounds. And in addition to the production overhead, we do have selling and distribution overhead. So how much we got product selling and distribution overhead per month? Already first year, it means initially when we are making an agreement, first we pay 25,000 advance and monthly we should pay 14,875. So the total amount would be 25,000 we paid as an advance for the first month, then 14,875, right? Or 975? 875. So the total selling and distribution overhead is 39,875. Is that clear? Then we do have labor. So what is the labor cost for the first month? 27,000. Okay. And in the first year they purchase the business also, right? So here you can see in the first month, sorry, in the first month they purchase the business with 3,15,000. These are nothing but payments. So purchase of business we got it as 3,15,000. Then the total payment, ten thousand five hundred, 39,875, 875, 27,000, then 3,70,000. So the total payment we got it as 3,92,370. Okay. So what is the balance? Actually from receipts minus payments we will be doing, but our total receipts are only 24,000. So we'll be getting a minus balance. So let me put in minus only. So the total balance, closing balance, negative balance of 3,38,370. So any question on this? This is the first year budget. Now similarly we need to prepare for the next 2 years. I hope it is clear. Then the second year, so the first month, sorry, second month, the first month closing will be the opening for the second month. Selling overheads. Okay. Just see the selling overheads. Okay, 39,875. Let me see. Because when we purchase, first we need to pay an advance. We are paying 25,000 as an advance plus that first month rent. So advance 25,000 plus first month rent 14,875. So total comes to 39,000. Clear? Yeah. Now the closing balance of the first month will be the opening balance of second month. So opening balance is 3,68,375. Then cash sales, same 25% are cash sales, so 96,000 into 25%, so 24,000. Collection from debtors. Now someone need to help me here. What will be the collection from debtors? 25% of sales will be for cash, remainder will be on credit. So for settlement in the month following that of sales, it means we will be receiving the amount in the next month. So first year amount we will be receiving in the second month. 72,000. Okay, let me calculate. 96,000 into 75. Very good. 72,000. And there is a discount also, na? A discount of 10% will be given to the selected customers and who represent 25% of gross sales. So how this should be done? Discount of 10%. So out of total sales is 96,000. On that 25% of gross sales. It means the selected customers will be 25% of the gross sales. So 96,000 into 25%. And on that, how much discount will be given? 10%. So we got a discount of 2,000. Right. I hope it is clear. So what will be the total receipts now? Now just present it in brackets. Actually, it is okay. Let me show you. So the total receipts will be so it is 2,74,775. I hope it is clear. Yes, is that clear? Right. Now the purchases. So previous month. So the first year purchases we need to take. So first year purchases, how much we got? 44,375. Then there is no change in the production overhead. So production overhead is 10,500. Total receipts, na? Here just see this one. Opening balance, there's cash sales, there's collection from debtors minus discount because we are giving discount, na? So it is minus 2,74,700. Okay. So selling and distribution overheads, can anyone help me out? How much I need to take? Now only the amount that is 14,875. Discount, okay, let me just see the formula for discount. Clear? I hope it is clear. Yeah. Then selling and distribution over there, labor is there. No? So what will be the labor cost? How much we got labor cost per second? 17,000. Then there is no increase regarding the purchase of business. But the delivery van was purchased for 15,000 in the second. For what calculation you? Oh, depreciation for equipment and machine. Yeah, depreciation for equipment, I calculated it for production cost price because this production overhead includes the depreciation amount. Let me show this one. Here you can see it, the total fixed production overhead. It includes the depreciation. So depreciation is a non-cash expense. So that's why from 1,50,000 amount, I deducted the depreciation amount of equipment, and then on the balance I divided it by. For your reference, this I am showing here. Just see. So the total production overhead is 1,50,000, and the depreciation on equipment I deducted because it is a non-cash expense. So I got 1,26,000 as the net amount, and 1,26,000 divided by 12, I got an annual cash flow of 10,500, and this 10,500 annual cash flow I took it in the first month cash flow. I hope I addressed your query. And one more question: how we got calculation from data? Now, Jerome, calculation from data means here we are giving 1 month period to the creditors. Sorry, our customers. Here you can see this. See, 25% sales will be for cash and the remainder will be for settlement in the month of following sales. It means 75% is on credit basis. So the previous sales, actually in the second month, we need to consider the first month sales. So first month sales is 96,000. On that, 75% are credit sales. So 96,000 into 75%, then I got a collection from data 72,000. Okay. Is it clear, Zeno? Yeah. So purchase of business, there is no purchase of business in the second month, but we are purchasing. Here you can see the second month we purchase the delivery van. So 15,000 purchase of business. Okay. So I hope it is clear. Then the total outflow, total payment, purchases, plus production overhead, plus selling and distribution overhead, plus labor, plus delivery van purchase. So the total payment is 1,02,000. Okay. Then the balance will be. So what will be the balance? So already minus 2,74,775 we got. From that we generally deduct. Let's see. So it will be 3,07,75. So the balance is 3,77,000. Now again this will be considered as opening. Now what will be the cash sale for the third year? Cash sale for the third year, 92,000 into 25. Yeah. It is 23,000. Then collection from debtors, I request the participants to please help me. What will be the collection from debtors? Yes, 72,000. That is 96,000. Then discount, will there be any change in the discount? Same procedure. So this I am repeating that only. So the total receipts will be so it is 2,84,170. Okay. Then again purchases. So the second year purchase will be taken. So what is the second year purchase? 29,370. So there is no change in the production overhead. And even in case of selling and distribution overhead, there is no change. So labor, what is the third year labor? 18,000. Sorry, third month. So third month labor, 18,000. And there is no other expenses because there is no purchase of business and delivery. So the total will be, oh sorry, total payment will be so 72,750. Then the balance, so it will be 3,56,000. Now this will be the balance for the fourth. And the collection from debtors, what will be the collection from debtors for the fourth month? So it is 24,000. Now what will be the, sorry, small correction, cash sale for the fourth month will be 96,000 into 25% and the collection from debtors. So what will be the collection from debtors for the fourth month? Yeah, very good, 69,000. So that is 92,000 into 75. Then discount, very good, 2,000. Then the total receipt, minus 2,56,000. Now the purchases, the third year will be taking purchases for the fourth. So the it is 30,625 and there is no change in production, even in selling. So labor for the fourth year, 18,750. So the total, so 74,750. Then the balance would be 3,40,009. So this is the cash budget. So, okay. I hope it is clear for all. Yes. Yeah. Why selling and distribution is different in the first year is, in addition to the regular rent, we pay 25,000 as advance. Here it is mentioned. We pay 25,000 as advance in addition to the regular amount. Towards the rent. So that's why it is different. So 14,875 we added 20. So here my request is, without referring to your solution, I want everyone to practice this question. This is the maximum level we can expect from the test. So can I expect everyone to solve this? Will you try this? Yes. Hello. Excel sheet 1. Purchase of raw material calculation. 1 second. This one, right, Ankit? Purchase of raw material. The purchase is the first month free. Okay. This one. Yeah. Collection from data for the fourth month. Now here, for the fourth month, I need to consider the previous month sales. So my previous month sales is, here you can see my previous month sales, I believe, 92,000. On the 92,000, 75%. So 92,000 into 75%. So 69,000 is nothing but Saman collection from data. So what here a small task I will be giving to all the participants. So today, without referring your study text in answer, just try to solve it and just see to what extent you can do this. And after doing that, if you find any queries, then definitely you can get back to me. I give some inputs on it. Okay, will that be clear? Is it clear? Okay. One more thing, what I will be trying to do, maybe by today end of the day, this session video I will upload in the LMS. So I request all the participants to please go through it. So I hope it will be good, right? So shall I upload the session, today's session with recording? So maybe by end of the day, you can expect that I will be doing that. So I request everyone to please go through this. Okay. So that's it. So have a good day. So tomorrow we'll continue the other call.